Okay, so
Yes.
you've been here 3 years in a row.
Yes.
And I know, you cover the gamut from banking to politics. But here at the Aspen Ideas Festival, you're talking about what, violence, youth violence in Chicago?
Now, my panel, which is at noon, which as myself and my co-chair Tom Wilson, CEO of Allstate, our discussion is going to be on anti-violence efforts in Chicago.
Okay.
You may remember, I think we launched our campaign on your show where we raised almost $50 million in about 3 months from the business community in Chicago to fight violence in Chicago. And we're now about 18 months in, and we're going to talk about what we found and what we're doing and how we're actually proceeding to do that.
But has it gotten any better? Because you still see the bad headlines, right? You still read the headlines of gang violence in Chicago.
Yeah.
The streets of Chicago are unsafe. I mean, has it gotten any better?
Oh, wait, Betty, slow down for a second. Slow down. The streets of Chicago are not unsafe. Certain areas of Chicago, there's gang activity and there's violence, certain types of violence. Chicago is a very interesting dichotomy in the way it stands, but also violence in urban areas is very interesting. Chicago actually has some of the safest neighborhoods in the country. The North Side, the Gold Coast, where you go and shop all the time, the Near West, those places are extraordinarily safe. But as is the case in most urban areas, there's communities and pockets of usually intense poverty, intense violence. And you've seen it in Baltimore. They had Mayor Landrieu on here yesterday talking about how it is in New Orleans.
Right.
It's in Philly, your hometown. Detroit's changing because because of what's happening with the demographics there. But it's an urban problem. But it's almost always confined to a few neighborhoods.
Areas, yeah.
Yeah.
Okay, well, moving on from what's going on in Chicago locally to what's going on globally. Okay, so, Greece. I know you're watching the headlines there, right? I mean, how that's affecting the debt markets and affecting the markets overall. Are you worried about Greece?
No, I don't think the markets are either, because we saw. So I've been a little bit out of pocket because I'm out here trying to make a lot of these sessions.
Because you're out here hiking, that's what you're doing.
I'm hiking, I'm bird watching, and I'm doing some sessions. I'm doing all those things I can't do in Chicago or New York.
That's right.
But right now, I saw the 10 years trading off, so the govies are trading off a little bit, which kind of gives you a sense that the bond market feels that there might be a resolution to it. Stock market was up when I last left, so the stock market's calm. They have the big referendum on Sunday. Whatever happens with Greece, whatever happens with Greece, it's not going to be a big market-moving event.
You don't think so?
No, I absolutely, positively do not think so. Certain things have been baked in, whether they choose to stay in the euro, which is the overwhelming sentiment, and probably best counsel they would get is to stay in the euro and figure out how to work their economy to improve internally the political will to get some things done, which is all Greece really comes down to.
Yeah.
Adjusting. Greece is almost like we talked about in the states, the municipalities. And I use a term called political will. And I use it in Illinois, we talked about it in Detroit. We'll talk about it in Puerto Rico, but Puerto Rico is a different example, which we'll get to. Very different. They've got real problems.
Right, but just since you mentioned Puerto Rico, should pensioners be worried about Puerto Rico?
Two things. Let me finish up on Greece, Betty. I know you really move things.
Come on, Jim.
I know. I'll try to put a bow on this. The referendum comes out. We'll see if, in fact, they're going to have the discipline to make the internal adjustments they need to in Greece.
Okay.
Any way it goes, I think the markets will be fine, and they're telling us that. Puerto Rico. Puerto Rico has some significant structural problems. One, they have a declining population, and it's just, they're leaving. The skilled folks are leaving, the middle class folks are leaving. There's no jobs. They have a shrinking economy. It'll probably be negative. There's no commerce. It's tourism and almost nothing else.
Right.
They have an overwhelming debt load of $72 billion that no matter what they did, unlike Greece, they cannot pay. Puerto Rico cannot pay $72 billion. There's going to have to be some sort of a restructuring, some sort of a recap, some sort of a haircut that must be taken by its creditors.
By the private.
They can't tax their way out. They can't grow their way out. And some of the...
But is that a Lehman crisis in the making?
It's contained.
Okay.
I mean, Puerto Rico is almost like Greece, and it was almost like we talked about Detroit. So the municipal bond markets have been looking at Puerto Rico for some time now. This is not new. When you speak of your pensions and that and your general municipal bond funds, you should not be worried at all. And as I always end my comments when I talk about munis, and I always say, grandma, grandpa, don't sell your munis. Do not sell your munis.
Even in this scenario?
No, because the mutual funds that have invested in Puerto Rico over the years have more or less gotten out.
Okay.
The funds that are in Puerto Rico, there's two types of significant investors in Puerto Rico right now. Hedge funds, which go in there and go into distressed situations where they think they can make a lot of money, meaning points. Your typical muni investor wants a nice 4 or 5% tax-exempt yield, lay your head on your pillow, and go to sleep.
Yeah.
A hedge fund goes in, and they want, 10%, 15%, 20%. They started buying the Puerto Rico GO debt in last week. It was trading 76 cents on the dollar. I saw 55 cents quote on the dollar. It might be a little bit back today. I don't know. So they started buying it cheap. The other investors in Puerto Rico are the high yield muni funds who know what they're doing and who know what they're getting.